Yo, what's up, guys? It's your boy Looney, and today I want to talk about something that doesn't get enough attention. The hardest part about selling options. Everyone talks about how it's free money and how you can collect premium every week and how it's basically like building your own dividend machine. I just posted a video on this yesterday, but no one talks about what it actually feels like. The patience, the discipline, and honestly, the emotional part that most people don't survive. Because if you sell options long enough, you'll realize the hardest part isn't actually the math, it's the mindset. Now, before we get into this video, quick shout out to the Discord. It is free to join, and I also offer a premium membership for $8 a month, and you get access to one-on-one coaching, trade callouts. I have an option selling course. I do giveaways and more. You can check it out. All the links are in the description. Now, when you first start selling options, it's exciting. You're collecting premium, getting paid weekly, and it feels consistent. But then boredom hits. Option selling is slow. And you're not doubling your account overnight. You're collecting that 1% to 4% a month, and that's if you're disciplined. So when you see other traders catching 50% swings on risky plays, it's hard not to feel like you're missing out. Now, the truth is patience is the hardest part. It's okay it's okay being not always being in the action. And it's really sitting through weeks where nothing happens or where the market moves away from your strikes and it feels like you're just watching paint dry. And that's the part where most people quit on. Now, me personally, I've held cash. I've had 11,000 in cash waiting for this opportunity. And I saw everyone having their accounts double, having these insane months. And I just sat there patient, just sat in there waiting for my opportunity to come. And now I have deployed most of that cash. And I'll get into why. Was I aggressive? I might have been too aggressive. But really, my thought process is if we do see more dips, I'm comfortable owning the stocks at these prices. And that's why I'm selling puts on stocks I actually want to own. So let's actually get to the emotional side of selling options. Because when you sell a covered call, you do collect nice premiums, but the issue is the next day, what if the stock rips higher, right? And we saw that this past month, we were flying through all-time highs, something like Iron, Beyond Meat. We could include a lot of these stocks were really just shooting up. And the issue is you cap your profits and you sort of feel like you missed out. And I could personally feel like that with Beyond Meat. I had two covered calls, one at the $4 and one at the $7. I was able to collect juicy premium, but when the stock ran to $7 or ran past $7, I couldn't do anything. I was really stuck because I had these options already locked in, and I kind of felt like, I was missing out on these massive gains. Now, we did see it pull back significant, so that's why patience comes into effect. Let's also talk about a cash secured put, because let's say you sell a cash secured put and the stock dips 10%, and then you're actually looking at yourself thinking you're at a bigger loss, even though your plan was solid. Emotionally, it still stinks. Now, I can look at that with so many different scenarios, like most recently is Webull. Did I sell a put too aggressive? Possibly, but this is what I set up when I first did this strategy. And I just need to be patient. I need to wait for Webull to go past my average cost and sell a covered call. But as of now, there's not really much I could do. I did this setup when I first set it up, and I need to deal with that. Now, that is the mental battle, because you need to stay calm when you're assigned in either direction or possibility of assignment. Because when your trades look red or when you see your safe setup go against you for a while, it can affect you emotionally or your mental state. So it's not the strategy that's hard. It's actually not letting your emotion make you overreact. Because the people who can control themselves are the ones who actually make it long term. Now, yeah, I could definitely agree with that. I am in that same boat. I'm still dealing with emotional distress. And yeah, I'm definitely a lot better than I am, but I'd be lying in saying that it doesn't hurt to see some of your positions go up really significant past your strike prices and some of yours go below your strike prices with selling puts. And really, I've just kind of got to a point where I've learned to just deal with it. That's just the way investing goes. It is a very humbling experience in either direction, and markets are very irrational. So yeah, that is a very important part. Now let's actually look at another tough part, and that is discipline. Because it's easy to get greedy once you start winning. Selling puts aggressive, selling covered calls on all your shares. But you need to think why, or you start to think, why stop at 3 contracts when I could just do 10? And you kind of go in that sort of mindset where you really start sizing big. And that's how most traders actually blow up. Not from the bad trades, but from overconfidence. And being disciplined means staying cash secured, even when you want to size up. And it means knowing when to roll with selling cash secured puts or covered calls, and when to just take the loss and just kind of move on. It's understanding that the game isn't about being right every single time. It's about managing risk and protecting longevity. See, option selling rewards the consistent, and it's not about the clever. I'm never trying to trick the market. I'm never trying to pull a fast one. I'm just simply reacting. If a stock is oversold or overbought, that's when I open up some trades. And right now, a lot of these stocks are considered oversold, but they can continue. So that's why position sizing is important. Something like Zeta, we could see, went down significant, shot up significant, and sort of just all over the place along with these other stocks. And I didn't go all in. I didn't try to trick the market or trick the price. I sold a put at 16, it dipped lower, went to 15, dipped lower, went to 14, dipped lower. And really what this is doing, this is setting up that discipline to not go all in. Instead of doing 3 contracts at 16, which some people might have done, or even 18, being more aggressive, I just simply let things play out. And this sort of mindset has definitely helped me in my selling options journey. Now, number 4 is the reality that it's not passive income. Now, the truth is, everyone says option selling is passive income because it's slow and there's not much that you need to do. But it truly is, it is slow, but it is truly hands-on, and it does require focus. You do have to manage positions, you have to watch volatility, you have to adjust the strike prices and deltas, and just stay aware of earnings or even some macro events. I would kind of consider it more like running a small business is really the way I look at it, and you're collecting that revenue or profit. Because that's why most people don't last. They treat it like a set it and forget it strategy, when really it is a discipline game. They start just selling puts at delta, or they start selling the deltas or the puts at a 30 delta, just because that's what the golden ratio is 30 delta. And they start paying attention to the valuations or the market conditions, and that's how you get burned, because the market goes in any direction at any moment. Look, if you start selling puts at 30 for the whole year, there's going to be a time where you're going to get assigned and it's going to be really far in the money. And that's why you need to wait for pullbacks, sell puts on red days, sell covered calls on green days, wait for overbought and oversold moments, wait for volatility to spike. So it's not as passive as most people make it out to be. So what is my mindset now? Because I've definitely developed my own strategy, and I've definitely built on my own mistakes. Look, I sell options almost every week. I do it monthly, I do it weekly, but I'm doing the covered calls, cash secured puts, and I'm even mixing in some spreads, but my mindset has changed a little bit. It's really not about how much I can make a week. It's about how long I can keep doing this without blowing the account up. So yes, the hardest part about selling options isn't actually the charts or the Greeks or even the assignments. It's staying patient when it's boring, calm when it's red, and humble when it's going well. If you can master that, you'll last longer than 90% of traders. So yeah, that's the part that no one talks about. Selling options works. It's powerful, but it's slow, it's emotional, and requires real discipline. If you can handle that, you'll realize that consistency is way more powerful than excitement. If you found this helpful, drop a like, comment what you think the hardest part of selling options is, and I'll see you in the next one. Peace.